So the message I just dropped now on the Telegram, you guys should use it as the comment section, guys. So can everybody hear me clearly? Can everybody hear me clearly, please?
Yes, sir. Yes, sir.
Kindly use, don't unmute yourself. Don't unmute yourself. Kindly use the message I just dropped on Okta Telegram now. So use the comment section for discussion. So whatever question you want to ask, put it there. Actually, today is Friday. I should mute yourself, please. Now, you people don't start, though. And this person is my namesake. Imagine. As soon as you come in, please mute yourself. Please mute yourself. Actually, today is Friday, and I might be preparing to actually club tonight. So you guys are occupying my time. But thanks to Okta. So you guys should always thank Okta for bringing in all this type of premium opportunities for you guys. Because most of the people Okta bring in on board, you guys know how much it costs and how much stress it costs for you to have access to them. But Okta just make it very, very seamless for you guys to meet very amazing traders all the time for absolutely free. I don't think there's any broker that does something like that. Okay. Before we even proceed, first take your time to first type "thank you Okta" in the comment section first before we proceed. Let's see how much you appreciate Okta, because trust me, they didn't charge you guys for this. So just type "thank you Okta." Because tell me that broker that would actually be so much interested in you guys' growth. Like, just tell me. So it won't cost you anything to just show appreciation. Your thank you is not going to do anything for them. They'll always turn up for you guys. But trust me, they really have you guys' best interest at heart. So you guys should take your time to appreciate them. I want more people to join us so that we can kick off with the class. I want us to get to about like 200 so we can proceed. I must say, as I'm looking fly. Fine boy in wearing Zara. I literally had to park somewhere to have this session with you guys because I don't want to disappoint. So let me share my screen. Let me share my screen. So I believe everybody can see my screen now. I believe everybody can see my screen, right? I believe everybody can see my screen.
Yes, sir.
Okay, good. So this is, if you guys saw the signal that I dropped, you will notice that I have this line drawn. Like I have this line. You can go back to go and check it. And this was how I gave the signal right here before, which was this first massive cell. This was this first cell right here that came from here. But if you guys go back to the post, you will see that I have this line drawn. And this line is actually what I call extreme POI. So what do I mean by that? This is not for beginners actually. Like in every trade setup, there will always be the closest POI and there will always be an extreme POI. What do I mean by that? Most of us that trade smart money concept, we all know that whenever you have a pattern like this, we will always have two POI. We will always have a breaker block and we will always have an extreme POI. So the first entry that I took here was from what? Was from the breaker block, which breaker block often create liquidity for the extreme POI, right? So the market did whatever it wants to do, you sell, blah, blah, blah. There's something about this trading of a thing. You can't control the outcome of your trade. All you just have to do is you just have to be in the right place at the right time. And as important as getting in on a trade is, getting out is also very, very important. The same way getting in is important, getting out is also very, very important. I'm gonna see this fine girl. We just pass now. Should I leave this session or go and meet fine girl?
No,
Don't mute. Don't type out. Don't. I can show you people. The girl don't pass. The girl don't pass. Don't worry. I will show you guys next time. So should I leave this session and go and collect the girl number?
Please, sir. No, sir, please.
How far fine girl? Don't try that at home. Oh. Don't try that at home. Oh. You know all those girls, they will bill you. They will bill you. So as I was saying, there is always an extreme POI and there is always a closed POI, right? There's always both. So now let's explain this concept of extreme POI and breaker block POI. Please mute yourself, please. Now we have different type of trading range, right? So let's talk about the ABC trading range that I shared with you shortly. I drew that we have the first one. Please mute yourself, please. We have the first one, which is the trading template, which is the one that takes out liquidity. Please mute yourself. Who is this person? Oh my God. Who is all these people like this? Let me first block the person first. You don't need to mute yourself, or I'll just keep removing you. Don't worry. So now, as I was saying, so we have the first one, which is the trading range of other block that takes out liquidity. What is liquidity? Liquidity simply means any turning point in the market. Liquidity does not necessarily have to be equal highs or equal lows. Any turning point in the market is liquidity. So that is why I always emphasize in my content that there's difference between liquidity and liquidity inducement. All these things is English, but you have to understand it. Liquidity means money. So any turning point in the market, any point like this, money is involved because some people are selling and some people are buying. So which means every turning point like this is liquidity. But most of you guys see it online, they tell you that when market takes out liquidity, it sell off, you can sell from there. No, that information is not correct because there are some highs that the market would take, but that high is not a liquidity. So the type of high that the market needs to take is what we call liquidity inducement. Now you'll be like, what is the difference? Now let me explain the difference between these two for you guys before we proceed. So now, like I said, every turning point is liquidity. So what is inducement? Inducement, if you type your dictionary, it might bring inducement means trap or deceive or something like that. So how does this align with trading? How does this work? Now, any point can be called a liquidity, but not all points can be called a liquidity inducement. So what is inducement? Now let's do something now. Let's say you have this. Market sweep this liquidity, right? I didn't say liquidity inducement. Market sweep this liquidity, then it broke structure, then you have this. Then you have this. And you have this drawing too. You guys should listen attentively. Someone wants to buy from here, someone wants to buy from here. Now, if I'm going to ask all of you guys, which of these two is high probability of market buying? Which of these two? Can you guys drop it in the comments? Which of these two is higher probability? Which of these two is high probability? The 1 or the 2? I want more comments, please. I want more comments, please. Now, some people are saying the first one, some people are saying the second one, because I know that some would know it and some would not. Now, the right answer is the number 2 is the high probability. And I'm going to explain. It's not even the both. The number 2 is the high probability, because the number 2 has what we call liquidity inducement. And what do I mean by that? So now, let's explain this thing together. Let me redraw the number 1. Let me redraw the number 1 again. So this is what we have in the number 1. And this is what we have in the number 2. So what is the difference between these two? Now, some people will call this inducement. Some people will call this inducement. But let's talk about what inducement means. Inducement simply means when you deceive someone. Now, which one of these two price action deceive people? This one or this one? You can literally tell me that it is this one, because what does this mean? As far as structure is concerned, we are being told that market create higher highs, higher low, higher highs, higher lows, blah, blah, blah. So now, when this market did this, what do we have? So you will have think this is a low, this is a high, this is a low, and this is another high. So you must have been thinking the market would buy from here. Excuse me. You must have been thinking the market would continue this structure and buy from here. Why? Because this point broke structure, which gives an illusion that this point is a demand. But you forget that this point is an incomplete pullback, meaning it refused to pull back to 50% of the initial impulse. And there's a rule that I follow that retracement is for market to give us a 50% discount on the minimum. So once your retracement is not up to 50%, that means the pullback is not complete. And most often than not, you would spot a fair value gap somewhere below it. So the fair value gap would actually signify inefficiency, incomplete transaction. So, but this particular one here, did it induce anybody? No. Did he, what traders does this guy influence? No, because no structure was broken. If this high was broken now, a lot of people want to buy from this structure point, which would make them what? Liquidity. So the market will take out their liquidity as a result of the inducement of this fake break of structure and come to the real demand and buy. So which means this guy right here, which is an incomplete pullback, some people wants to buy from there because they know structure to be higher highs, higher lows, blah, blah, blah. So the market will take their stop loss and eventually buy. And the market will not just buy. Let me tell you how much market will frustrate them. As soon as the market tap into this guy, they will think, oh, I'm the one that is wrong. The market is bearish. This is a new break of structure to the sell side. Now they want to sell again from here. And the market will do what? The market would take their sell again. Now they are going to start telling us that it is their stepmother that is doing them, or it is their ex-girlfriend that does not want them to be successful, without knowing that it is just that for every valid price action, there will always be an invalid one. So for every valid, anything that is valid, there will be an invalid one. Anything that is right, there will always be a wrong one. So there is always a right demand. There's always a wrong demand. There's always a right pullback. There's always a wrong pullback. So whenever you have a wrong pullback, others will see it as the right one. But because you are informed, you know that a pullback must pull back to at least 50% or must fill a fair value gap. If in as much as it didn't do any of those both, that means it is an incomplete pullback. Then you are not going to see it as a structural point. You are only going to see it as a liquidity inducement for market to grab and buy. So, which takes us back to what? To my ABC strategy, which is A means what? Demand or supply. So this one can be whatever thing you consider to be a demand or supply area, right? B is your liquidity inducement, which is what? The incomplete pullback. It can be the part 1 or the part 2. And the 3 and the C is the target, which is the external liquidity. So which means you have A, incomplete pullback, B, then C. So that is the first diagram that I dropped on Telegram for you guys. So the second one, where is the second one? The second one, which is this one right here, which is the one for the breaker block, is this. Remember, I said A is your supply or demand area. So under your supply or demand area, we have different types of order block. We have order block that takes liquidity. We have the one that we have breaker block. We have rejection block. So whatever type of block that you have is your A. But after that block, you must put an inducement, which I consider as B. Then for every trade, you must have a target. So your target is C. Okay? There's a lot of things that goes with this, but there's no way I'll be able to explain everything deeply with just this short session. But if you take your time and go and watch all my educational content, you'll be able to understand them properly. So let's go to the gold trade that I said I would break down for you guys. So now, how does this work? How was I able to get in on this gold trade using that same approach? So let me clear this drawing. So now, using the concept of ABC, I bought from here and I also bought from here. So now, let's break this down. Where is our A? Where is our B? And where is our C? So now, this whole price action, this whole storyline started as a result of market taking out this external liquidity. For people that have watched my content properly, you will know that I said, after markets take out any external liquidity, always expect a pullback. Because at every external liquidity, a lot of people put their take profits there. A lot of people put their stop loss there. So which means a lot of transaction is always going on around external liquidities, which always influence the market to pull back once market hits the external liquidity. So as soon as this market hits this external liquidity, I know that we are going to have some sort of pullbacks, right? So now, having that in mind, what do I have, right? I have this inducement right here. How is this an inducement? This is my A. This is my B in this range. And this is my what? My C. So, how is that my B? Let me draw my fib. From this low to that high, you all can see that B leg didn't pull back to 50%. So that makes this guy a demand. So being a demand, I don't want to enter the trade directly, so I was waiting for much more confirmation. So on my confirmation, what did I get? I saw that this internal structure was broken. Was broken right here. So if you go to 3 minutes, If you go to 3 minutes, if you draw from this low now that broke this structure to this high, draw your fib. You will see that this pullback did not get to 50%, which makes it a what? An incomplete pullback. So this is my A. This is my B. And where is my target? This is my C. So that is the first buy right here, which is this template that we have here. Now the second entry is this template, the one of breaker block. That is the second entry. So now let's break that down together. How does that happen? Now, you all can see that structure was broken here. This point was a supply because it broke this structure. So the market is supposed to sell from this guy, but it only gave us what I call a rally base and a rally. What does that mean? This is a break of structure. Everybody believes market is supposed to sell from here. Now the market came, tried to sell, then failed. So this is what I call a violation block. It is also a form of a demand. So that is what we have here. So that point is my A. So where is my B? My B will come as a result of the immediate pullback. So where is my immediate pullback after this break of structure? The pullback is right here. And you don't need to say too much. Once you draw your fib, you already know that pullback is not up to 50%. And that is the reason behind this second sell. So which means what I drew for you guys, which is this, type 1 is the first entry, and the type 2 that I drew is the second entry. Okay, so this is actually, I know, even me, I know that it is easier said than done, right? But it takes practice, it takes high level of understanding order flow. Because one thing about trading is that, trading is, the reason why trading is difficult, let me tell you, is trading is, to be profitable in trading, you have to be in the right place at the right time. Most of you can spot all this, but you spot it in the wrong time. Most of you will spot a good trade at the wrong time. And most of you will spot a bad trade at the right time. Both of you are not going to make money. So to make money in trading, you have to spot a good trade at a very good time. Okay, so I wish I can go further than this, but this is just how far I can go, right? So because we don't have much time to educate ourselves more than this. So we don't have much time to actually kind of educate ourselves more than this. But I hope with this little explanation that I did, you guys are able to understand one or two things, right? I should talk about divergence. I don't think I should talk about that. A lot of people here are beginners, so they might not be able to relate. So I might be taking probably like 2 questions. So can like 2 people ask a very reasonable question so I can just go through the question. And under the comment section, I'll be picking 2 random people that will have access to my course for free. So make sure you do comments, something nice. So somebody should ask a question. Someone should ask a question. I should talk about double break of structure. Okay, let me do that briefly. So now, let me talk about double break of structure. You know that this is what we see online. We believe that when market creates higher highs and higher lows, they told us that once market has done this, this is a break of structure and you should be expecting the trade to sell, right? But let's now take ourselves back to the concept of ABC, right? If ABC is like this, you can see that this simply means this is a one break of structure. So which simply means most of the time your one break of structure is going to fail. You know, it's just that. So what that means is very, very simple. Now, when market break two structure, it shows a much more higher intent in what the market wants to do compared to one break of structure. And it's going to save you from falling around ABC pattern. Because now, you can call this a one break of structure, whereas it is an incomplete pullback. And you think the market will buy from here and the market will just sell. But if you had waited for these two to get broken, then that means you have a valid buy at your hand. So it's just normal common sense. Why not two? Because most of the things that we see on this YouTube, which is most of the things they preach to us about structure, most of them is not even right. They are right based on eye and sight, but once you get to the chart, a lot of things is going on. So you have to make sure that you are in the conservative side of things. So I think that's the layman explanation I can give to it. So double break construction is going to save you from unnecessary inducement. Okay? It's going to save you from unnecessary inducement. Who else? Who else? But you talked about rally-based rally. What happens if the pullback is complete? If the pullback is complete, then you know that there's no inducement there. You know, if the pullback is complete, you have this. That means those two areas are induced, are liquidity points. Meaning, if you have a complete pullback like this now, when this market is coming to this third entry, I'm not just going to take trade from it because a mitigation point is a liquidity point. Right? So if your pullback is complete, then that point is already a liquidity point. So that is that about that. I think I have tried my best. So that is that about that. So you guys should drop your appreciation message to Okta for giving us this privilege and letting me have a very great time with you guys. So, because trust me, I really enjoy this whole session today. So in the comment section, I'll be picking probably few random people, like probably 2 traders that will be having access to my free private channel. So thank you very much.
Sorry, sir, I couldn't comment.
Bye bye.
I wanted to ask
Don't
something.
ask anything. Bye bye.